Can ICICI Prove Protect and Gain protect your loved ones and grow your wealth at the same time? Let's evaluate the features, benefits, drawbacks, costs, and potential returns of ICICI Prove Protect and Gain. This review will also provide insights into how ULIP's Unit Linked Insurance Plan function. Let's get started. Welcome to holisticinvestment.in. ICICI Prove Protect and Gain is a non-participating linked individual savings life insurance plan. First, let us look at the main features. Secure your family's future with life insurance coverage. Select from 2 plan options tailored to your life stage and needs. Build wealth with market-linked returns. Enhance your coverage with 2 rider options. Access 4 investment strategies and choose from 22 fund options. Earn a maturity booster as a reward for staying invested until maturity. Receive regular monthly payouts for additional income through systematic withdrawal plan. Enjoy potential tax benefit on premiums and payout as per current tax laws. Next, we shall look at the benefits of ICICI Prove Protect and Gain. First, death benefit. Under both the plan option, the death benefit is payable to the nominee. Death benefit will be highest of sum assured including top-up sum assured if any, fund value including top-up fund value, or minimum death benefit, that is 105% of total premiums paid. Next, maturity benefit. Under both the plan option, on survival of life assured until the end of the policy term, you will receive the fund value including top-up fund value if any. Next, we shall look at the investment strategies and fund options in ICICI Prove Protect and Gain. First, choice of funds. As per your savings outlook and risk appetite, you can choose from a range of funds to save your money. The names of various funds available along with their risk-reward profile are given in the table here. Before selecting the fund, assess your risk tolerance and make sure it aligns with the fund's risk profile. Next, choice of portfolio strategies. You can choose from 4 portfolio strategies to save your money as per your risk appetite. First, fixed portfolio strategy. Under this strategy, you can choose to save your money in any of the fund options in the proportion of your choice. You can switch your investment amount among these funds using the switch option. Premium redirection and unlimited free switches between the funds are allowed for fixed portfolio strategy. Next, target asset allocation strategy. This strategy enables you to choose an asset allocation that is best suited to your risk appetite and maintains it throughout the policy term. You can allocate your premiums between any 2 funds available with this policy in proportion of your choice. Your portfolio will be rebalanced every quarter. Next, trigger portfolio strategy. Under this strategy, your savings will initially be distributed between 2 funds, multi-cap growth fund, an equity oriented, and income fund, a debt oriented fund, in a 75:25% proportion. The fund allocation may subsequently get altered due to market movements. They will rebalance funds in the portfolio based on the trigger event. Next, life cycle based portfolio strategy. At policy inception, your savings are distributed between 2 funds, multi-cap growth fund and income fund based on your age. As you move from one age band to another, your funds are redistributed based on your age. Next, we shall look at the charges under ICICI Prove Protect and Gain plan. First, premium allocation charge. It shall be levied in the first 7 policy years as a percentage of premium. First 3 years 6% and for year 4 to 7 3%. Fund management charge. It is 0.75% per annum for money market fund and 1.35% per annum for all other funds. Policy administration charge. It will be levied from the 4th policy year at the beginning of every month. It is 0.34% of annual premium for the 4th policy year and thereafter it will increase by 5% every year. Mortality charges. It is the cost of life insurance cover and depends on your age and gender and chosen sum assured. These charges will be levied every month by redemption of units based on sum at risk. Next, discontinuance charges. It depends on the year of discontinuance and the annualized premium. There is no discontinuance charge from the 5th policy year. Inference from these charges. ICICI Prove Protect and Gain plan deducts several charges before your premium is invested. Charges such as premium allocation, discontinuance, mortality charges continue throughout the policy term. In comparison, other market-linked products tend to have lower charges and more transparent investment processes. These high charges in ULIPs can impact your returns over time. Next, we shall discuss the advantages and disadvantages of ICICI Prove Protect and Gain. First, advantages. Premium allocation charge and mortality charges are refunded. A maturity booster is added as extra units at the end of the policy term. You have the option to receive maturity benefit as structured payout or an income stream for up to 5 years post maturity. Invest additional funds through a top-up premium. Partial withdrawals are permitted after the lock-in period ends. You can modify the premium payment frequency. Benefits are protected under the Married Women's Protection Act, safeguarding them from legal attachment by the court. Next, disadvantages. There is a 5-year lock-in period for surrender or partial withdrawals. The plan does not offer a loan facility. The minimum policy term is 30 years. Fund option lacks uniqueness with the overlapping investment strategies. The net premium is invested after deducting various charges. Now let's move on to the calculation section. The goal of investing in a market-linked product is to accelerate wealth accumulation. To determine if this investment meets the goal, we need to calculate the returns. We will begin by finding the internal rate of return IRR based on the benefit illustration provided in the policy brochure. For example, a 30-year-old male opts for ICICI Proof Protect and Gain plan with a sum assured of rupees 1 crore. The annual premium is rupees 80,000 with a policy term of 40 years and a premium payment term of 10 years. The returns illustrated 4% per annum and 8% per annum are not guaranteed and are merely indicative, as the final fund value is influenced by several factors including future investment performance. At an assumed rate of 4%, the fund value would be 28 lakhs with an IRR of 3.58%. At an assumed rate of 8%, the fund value would be 82.08 lakhs with an IRR of 6.73%. However, the potential returns of ICICI Proof Protect and Gain are lower than those of traditional debt instrument. This undermines the purpose of investing in a market-linked product, ultimately slowing down your wealth accumulation or potentially resulting in a shortfall. Long-term investment should outpace inflation. However, ICICI Proof Protect and Gain with a policy term of 30 to 40 years fails to deliver inflation-beating returns. Let's now explore better alternatives where you could generate higher returns by investing the same premium as shown in the earlier example. A pure term life insurance policy with a sum assured of 1 crore would cost rupees 30,800 per year. With a policy term of 40 years and a premium paying term of 10 years, this leaves 49,200 from the original premium, which can be invested to generate higher returns. Choosing the right investment avenue based on your risk tolerance is crucial. High risk investors may prefer equity, while low risk investors may opt for debt. In this case, we have selected an ELSS fund, which is also a market linked product. At the end of 40 years, ELSS fund grows to rupees 2.89 crores. After accounting for capital gains tax, the post-tax value stands at 2.54 crores, yielding a post-tax return of 10.12%. This alternative strategy clearly shows that combining investment and insurance is not ideal. The key benefit of this approach are better returns, that is alpha generation and liquidity. These two factors are missing in ICICI Proof Protect and Gain plan. Here is our final verdict on ICICI Proof Protect and Gain. With ICICI Proof Protect and Gain plan, you pay premiums for a limited period while receiving life cover for the entire policy term. However, only a portion of premium is invested in the market, and that too after several charges are deducted. At maturity, you receive the fund value. However, as the name suggests, the plan fails to deliver on both protection and gain, that is growth. The potential return of ICICI Proof Protect and Gain are not justifiable given the risk involved, and it has a high agent commission. Additionally, the policy's long-term nature, requiring a minimum term of 30 years, offers returns that are not proportionate to the risk. One key reason for those lower return is the high charges. Combining investment and insurance in one plan doesn't help you achieve either goal effectively. Instead, opt for a pure term life insurance policy to ensure life cover, which provides financial protection for your family at an affordable cost. For wealth accumulation, it's better to build a diversified investment portfolio. To create a strong portfolio, select investment products based on your risk tolerance, time horizon, and financial goals. If you need any guidance, consider consulting a financial professional who can help you craft a personalized financial plan tailored to your unique needs. A detailed review of ICICI Proof Protect and Gain is available as a blog post in our website, and the link is given in the description.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.